Finance. Economic realities and strategic opportunities. The financial landscape of dairy farming has become increasingly complex over 7 years, requiring sophisticated management approaches to navigate market dynamics, cost pressures, and emerging opportunities. Success requires understanding that financial viability is essential for sustainability and that economic performance determines the ability to invest in animal welfare and environmental stewardship. Market dynamics and economic landscape have created both challenges and opportunities for dairy operations. The 2024 market represents a significant transition period where South Africa is projected to have a record year for unprocessed milk production, highlighting the sector's remarkable resilience despite numerous challenges. Record production potential demonstrates the industry's ability to adapt and grow, despite facing complex global patterns, geopolitical shifts, domestic infrastructure challenges, and governmental reforms. This resilience reflects improved management practices, technology adoption, and strategic planning. Cautious consumer recovery requires balancing production increases with careful market development and consumer confidence restoration. Stable trade performance shows international markets maintaining stability despite global challenges, providing opportunities for export-oriented operations. Economic adaptation shows the industry successfully adapting to complex challenges, including load shedding, infrastructure failures, and economic volatility. This adaptation capability has become a competitive advantage for well-managed operations. International price volatility creates both risks and opportunities for dairy operations. The FAO Dairy Price Index dropped 13.4% year-on-year in February 2024, though remaining approximately 17% above pre-pandemic levels, demonstrating ongoing market premiums. Global market impacts from high energy costs in 2023 affected the dairy sector worldwide, creating cost pressures, but also opportunities for energy-efficient operations. Commodity fluctuations in butter, SMP, cheddar, and FMP prices show consistent variations that require active management. Market interconnectedness means global events immediately affect local dairy economics, requiring operations to understand and respond to international market dynamics even when operating locally. Consumer price dynamics show encouraging trends for market recovery. The Consumer Price Index for milk, eggs, and cheese declined significantly from over 12% early in 2024 to below 3% in November, suggesting improved affordability. Demand stimulation through lower inflation is expected to gradually increase consumer dairy consumption, creating opportunities for volume growth. Purchasing power improvements enable increased consumer dairy consumption and willingness to pay for premium products. Market recovery shows positive indicators for dairy consumption growth, though recovery remains cautious and requires careful market development strategies. Retail performance challenges highlight market complexity. In 2023, for the first time, all monitored dairy products experienced negative retail sales growth on a 12-month basis compared to 2022, marking a significant market shift. Price versus volume tensions show retail prices increased more than inflation, while volumes declined, creating complex market dynamics. Market adjustment requires balancing price increases with volume maintenance to optimize total revenue. Consumer adaptation involves changing purchasing patterns in response to economic pressures, requiring operations to understand and respond to evolving consumer behavior. Cost management has become critical for financial success. Feed cost dominance accounts for 50 to 70% of overall operating expenses in livestock farming, making feed management the most critical factor for profitability. Management priority focuses feed efficiency as critical for profitability, requiring sophisticated approaches to nutrition management and cost control. Quality investment in premium feed often delivers superior returns through improved performance and efficiency. Precision nutrition provides advanced feeding strategies that optimize cost per unit of production, rather than simply minimizing feed costs. Disease cost implications create substantial economic burdens that extend beyond immediate treatment costs. Mastitis burden includes substantial economic impact from labor and treatment expenses, discarded milk, reduced milk production, and potential loss of quality premiums. Chronic mastitis, particularly from Staphylococcus aureus, accounts for large cost shares due to bacterial spread and reduced cure rates. BVD impact represents considerable economic burden affecting milk production and reproductive efficiency, though financial impact often goes unnoticed. Heat stress losses create negative impacts on dairy enterprise economics through reduced productivity and increased management costs. Brucellosis outbreaks have significant financial implications requiring long-term management investments. Hidden cost recognition has become important for comprehensive financial management. Subacute ruminal acidosis creates hidden costs from leaky gut that impairs feed efficiency and overall performance. Water wastage can substantially increase milk production costs through both direct costs and reduced performance. Unproductive heifers create opportunity costs through resources invested in animals that don't contribute to production. Quality losses from bulk milk somatic cell count indicate probable production losses that may not be immediately apparent, but significantly impact profitability. Investment strategies focus on long-term sustainability and performance optimization. The principle that maintenance is cheaper than breakages guides continuous investment in dairy herds for optimal long-term performance. Long-term sustainability requires sustained investment ensuring profitability over multiple production cycles. Preventive approaches involve investing in prevention rather than treatment, consistently delivering superior returns. Asset protection maintains valuable livestock assets through proper care and management, preserving and enhancing their productive capacity. Technology return on investment has become a critical consideration for farm financial management. Automated feeding systems provide substantial labor savings that often justify investment costs while improving precision and consistency. Health monitoring technology enables early detection that reduces treatment costs and improves outcomes through prevention and early intervention. Precision nutrition technologies deliver measurable improvements in feed efficiency and production performance. Data systems enable better decision-making that improves financial performance through optimized resource allocation and strategic planning. Market opportunities are emerging that create new revenue potential. The global functional milk market was valued at 481 billion rand in 2023, projected to exceed 743 billion rand by 2029, with a 7.5% compound annual growth rate. Growth drivers include consumer awareness and willingness to pay premium prices for products with enhanced nutritional or health benefits. Innovation focus on product fortification with vitamins, minerals, and probiotics creates market differentiation opportunities. Market differentiation through premium products commands higher prices and improves profit margins for operations capable of producing differentiated products. E-commerce expansion shows rapid growth with global e-commerce sales projected to reach 22% of total retail sales by 2022, up from 15% in 2019. Digital transformation enables companies like Nestlé to target 25% e-commerce sales by 2025. Channel optimization through digital shelf analytics tools helps optimize performance in digital retail environments. Consumer convenience through digital channels meets evolving shopping preferences and expectations. Environmental revenue streams represent emerging opportunities for additional income. Carbon markets provide payments of $50 to $150 per ton CO2 for verified sequestration and emission reductions. Biodiversity payments offer $30 to $100 per hectare annually for habitat creation and species protection. Water services generate revenue from watershed management, flood control, and aquifer recharge services. Renewable energy through on-farm generation can supply regional grids with 15 to 30% additional income while reducing operating costs. Industry financial health shows adaptation and resilience. Confidence indicators from the AgBiz IDC Agribusiness Confidence Index rebounded to 50 points in Q3 2023, showing industry adaptation to persistent challenges. Challenge management demonstrates adaptation to load shedding, infrastructure issues, geopolitical tensions, and economic volatility. Resilience demonstration shows the industry's ability to overcome persistent challenges and maintain operations. Strategic positioning provides better preparation for future economic challenges through improved planning and resource management. MPO statutory levy application represents industry efforts to strengthen primary producer representation and financial standing. Primary industry support through levy application aims to benefit primary dairy industry operations. Industry balance addresses perceived subjugation to other role players' interests in the value chain. Collective action provides industry-wide support for primary producer representation and economic interests. Financial strengthening aims to improve the primary industry's economic position and bargaining power in the value chain. Profitability optimization strategies focus on multiple approaches to improve financial performance. Protein level optimization directly contributes to increased efficiency and higher profits through improved milk production and composition. Precision feeding reduces waste while improving returns through exact nutrition requirements and strategic protein supplementation. Performance enhancement through better nutrition directly improves financial outcomes and return on investment. Cow comfort investment benefits both animal welfare and farm sustainability, while enhancing profitability through improved production and reduced health costs. Home mixing considerations can offer cost savings through lower ingredient costs and utilization of on-farm resources. Responsible mineral nutrition can lead to cost savings or cost neutrality while ensuring adequate nutrient intake and optimal performance. Statistical leverage enables farmers to monitor herd health, optimize production, and predict market trends to enhance productivity and profitability. Data-driven decision-making provides competitive advantages in volatile markets through better information and faster response. Trend identification enables early recognition of changes affecting profitability, allowing proactive rather than reactive management approaches. Benchmarking allows comparing performance against industry standards to identify improvement opportunities. Key insight: financial success in modern dairy farming requires understanding complex market dynamics, optimizing major cost centers like feed, investing strategically in technology and animal welfare, and maintaining flexibility to adapt to changing economic conditions. The most successful operations combine efficient production with strategic cost management and alternative revenue development while maintaining focus on long-term sustainability rather than short-term gains. The 7-year period from 2018 to 2024 has demonstrated that farms with sophisticated financial management consistently outperform those relying on traditional approaches, particularly during periods of economic volatility and market uncertainty.